With interest rates hitting a 50-year low, many people are wondering if they should renegotiate their mortgage. Banks dropped their prime rates last week to 2.5%, and that has many homeowners wondering if they should try to get out of their old mortgages and take advantage of the new lower rates. Joining us now to talk more about taking advantage of the low interest rates is mortgage specialist Peter Fairhead from the Mortgage Group Alberta. And Peter, it sounds like a really good idea to refinance your mortgage right now with the rate so low, but it may not even be possible because your bank might not let you.
Well, some of the banks are saying unless there's a confirmed sale of your existing residence, they won't let you out of the mortgage at all.
And in fact, there can be some pretty huge penalties too.
Well, the banks look at it two different ways. There's a 3 months interest calculation, or there's what's called IRD, or interest rate differential. That interest rate differential could be if you've got a rate of 5 3/4 and the existing rate is 4.5. The difference is 1.25%, and you've got 3 years left. So they calculate 1.25% on the entire balance for the 3 years, and it can be quite expensive. I mean, I've seen $18,000, $20,000 payout penalty, which is very shocking for a lot of people.
Wow, no kidding. So which mortgages are worth refinancing then?
Well, there's two types of mortgages. There's a fixed rate mortgage and there's a variable rate, which fluctuates based on whatever the prime rate is for the bank. Those ones that people got from a couple of years ago are usually at prime less and a certain amount, up to say 1%. I wouldn't really touch those, because if you think prime is at 2.5 and they've got 1% off, they're paying 1.5%. It just doesn't really make sense. What we need to do is we need to look at what their rate is right now, find out what their payout penalty potentially might be, and then calculate out for them if they're going to be adding in additional debt, and see if the lowered payment really makes sense.
And in fact, if you're only a few months away from your mortgage being up anyway, you say, make a call and try to lock something in.
Oh, definitely. I mean, our 5-year rate is continuing to drop right now, even 1-year rates. But it makes sense for you to go and talk to a mortgage specialist and get your rate locked in. We have a 120-day rate hold, so if they're within that 4 months, go in and get the rate. If the rate drops, great, you get a lower rate. If it goes up, you're protected as well.
And quickly, you say in these tough economic times that it actually makes sense to try to get the lowest payments possible. Why?
Well, if you're a 2-income family and one person, say, goes to part-time, or they lose their job and you only have so much disposable income and you've lowered your payment, it makes sense to do it so that you can, instead of paying $2,000 a month, maybe it's $1,400, and that additional $600 makes the difference between paying your debt and not being able to.
Okay, great advice. Thanks for coming in.
You're very welcome.
For more mortgage refinancing tips, you can go to Peter's website at lifetimebroker.com.